Uh, so, okay. The project that was due yesterday was very, very good. So the total, the full grade for that project is 70, and then we got an average of 60. I'm pretty happy about it. So very good, and keep going with your good work. Today, we have another homework. Let me look at the schedule assignments. So we have both a homework and a quiz. It's due next Tuesday at 6 p.m. So I would recommend you complete the homework first. I think the homework will help you with the quiz. And then use responders to do quiz 1 for next Tuesday. Okay. So today and maybe possibly next Monday, I'm going to talk about our homework 1. Okay, just go over these questions so that to help you understand not only the accounting concepts but also how to solve accounting problems. So if you can open up your homework 1, I don't know if you are still able to open that homework. Do you still have access to your homework? Okay, good. Alright, so I just open up a homework, and then so my questions should be different from yours, but I would recommend you can, whenever I talk about a problem, you can look at your homework question and see which one is most similar. And maybe if you want to take a note on your note, you just write it down, homework 1, or question 1 or question 3, and then if you want to take note, just take note and how we solve the problem. Would that work? Okay. So let's look at question 2 here. Why do businesses exist? Anyone knows the answer? To maximize owner's wealth, is that right? Yeah, if you are a sole ownership business or a partnership business, you want to maximize owner's wealth. Even you are a corporation, you still want to maximize owner's wealth. To maximize legal liability, you don't want to do that, right? To maximize expenses, this is crazy, right? We don't want to do that. The last one, to maximize profits, I would probably do that. So the business exists because of, because we want to maximize wealth, we want to maximize profits. Okay. Any questions? Okay, the second one. Okay, this is straightforward. So this one, which of the following would be included in the operating activity section of the statement of cash flows? Okay. So let's look at those one by one. Okay. Can you find a similar question on your homework? Yes or no? No. Maybe just try to understand and if you are able to answer most of these questions, you will be good. Okay, so just try, just think, use your mind. So purchase of land, what kind of activity is that? Investing, right? Land is PPE, right? Property, plants, and equipment. So that's long-term asset. And when we purchase long-term asset, we want to use that for our business. And this is not our day-to-day business. Unless you are, real estate constructor, but basically not. We purchase the land, it is investing. Okay. Cash collected from customers. Is it operating cash flow? Yes. This is your cash collected from customers. And then cash paid to employees. Is that operating activities? Operating cash flow? Yes. And that refers to our wages expense on the income statement, right? And most of the things on the income statement, most of the activities related to the income statement will belong to will belong to the operating cash flow. Cash paid to suppliers, is that operating? Is it operating? Cash paid to suppliers? Yes or no? Let's do a poll. Okay. Multiple choice. Let me see. Multiple answer. Alright, I'll do A as true and B is false. Okay. True is the cash paid to suppliers is operating activity, and then if you agree with that, you choose A, and if not, you choose B. Okay, 30 seconds. If you agree that this is operating activity, choose A. If you think this is not operating activity, choose B.
Yeah, mine's not coming up.
I'm guessing it's because our free trial ended, and that's why that.
Oh, you don't, doesn't work? Okay. Then you probably need to pay that, for a subscription for a couple months for this class. If you don't have a iClicker remote.
Where do we get out?
She just let me know that she has some problem. If you have the iClicker remote, then you should do some settings, and if it doesn't work, you can contact BEIT. It's right over there, and see if they can help you with that. So, and you couldn't check attendance either.
I could for attendance.
Oh, attendance is good, but you can't answer questions, right?
Right.
Okay. All right, then I'll skip iClicker questions for this class, and then you can maybe figure out iClicker later. But be sure to check attendance, okay? Actually, cash paid to suppliers is an operating activity, okay? Why is it operating? It is your day-to-day business. You need to pay your suppliers for inventory in order to sell your products to your customers, right? So this is operating. It's not investing. Supplies is not investing, okay? The money you pay for suppliers is not investing. You're not invest anything. It's just operating. Okay, last one. Purchase a new office building. What is that? What is that? Investing. Yes, this is investing. This is not your day-to-day business, okay? Okay, next one. Financial information needed to manage a company is provided by an what system? Accounting, corporate tax, equity financing, which system? It should be accounting system, right? Yeah. Accounting system provides financial information to the company. How much we earn, how much we spend, and how much we owe. This is reflected in accounting information, okay? How many of you are business major? Okay, looks like most of you. Okay, yeah. So whichever major that you're gonna choose in the future, accounting is, we don't create anything. Okay, we don't create anything. We simply provide information. So we record the financial information of the firm. But for finance, if you wanna consider finance will consider maybe investing opportunities for the firm. Especially, it's either the invest in PPE or the invest in the investment tools like securities, bonds, stocks. So that's finance does, okay? And if you want to go to more conceptual majors, then that's marketing and management, okay? They don't do a lot of numbers. But finance is the most numerical, and then accounting. So some people say I'm good at math, then they should be good at accounting. It's not true. If you're good at math, you're probably good in finance, but for accounting, no, accounting is just a logic, how you record this information, okay? Okay, next one. Match each item below with the appropriate description using each one only once. What is income statement? Which one? What is that? What is the income statement? What does the income statement do? Or in other words, what is at the bottom of the income statement? What is on the bottom of the income statement? Do you remember? Why are you so confused? What is at the bottom of the income statement? Let's look back. So this is the income statement, right? What does the income statement do? Income statement records how much profit you have earned, right? So income statement reports a summary for all revenues minus all expenses during a period, right? This is what income statement does. What does the statement of shareholders' equity does? What does statement of shareholders' equity do? Which one? It's C, right? Reports the changes that took place in the amount of owner's investment during a period. Okay. And do you remember the structure of the stockholders' equity? Usually there are two parts of shareholders' equity. So the first one talks about stocks, and the second part talks about retained earnings. Okay. Because basically right now when we talk about shareholders' equity, we only talk about stocks and retained earnings. So the first one is how stock changed. Okay, what is the beginning amount of stock, and then how much we issued, or how much we repurchased, and then this is the ending balance of stock, and then retained earnings. And this is the second accounting equation that we think is most important, is how we get retained earnings, and from the beginning retained earnings plus net income minus what? Dividends, and then we got the ending retained earnings. Okay, so this is statement of shareholders' equity. Statement of cash flow is the reports a summary of cash collected and cash paid. This is the most straightforward. And then balance sheet. Balance sheet is E. It reports the assets, liabilities, and shareholders' equity of a company at a specific point in time. Okay, so besides balance sheet reflects the information of a firm at a specific time in the period. Usually it's at the end of the year or the quarter or the month. But for cash flow, statement of shareholders' equity, the income statement, all the other statements cover the information during a period of time. Okay, it covers a time window during a period of time. It can be a month, a quarter, or a year, but balance sheet covers the information at some point. Okay, at the end of the year, at the end of the quarter. All right, and notes is A. Reports additional information. Any questions? I know these are not new information, but we need to go over this again and again for you to understand. Question 6. If a company total assets equals to 50,000, shareholders' equity equals 10,000, then liability must equal how much? Yes, 40,000. Anyone need any more information of this question? Okay. Good. We just skip that because this is just a accounting equation. Assets equals liability plus shareholders' equity. Okay. Okay. Question 7. An asset is an amount what? While a liability is an amount what? Which do you choose, A or B? A. Yes. Asset is the amount you owned, while liability is the amount that you owed. Okay. Question 8. A transaction may be recorded with an increase in liability and a decrease or increase. Look at the question and see. Let me write down the accounting equation. Right, this is the Kelly equation, and then the question is an increase in liability will correspond with a increase or decrease will be an increase in net asset, decrease in shareholders' equity, or increase in shareholders' equity. Which one do you want to choose? B, decrease in shareholders' equity. Yes, it's B, right? If there's a decrease in asset, then the equation won't hold anymore, right? There should be the same amount on both sides to make it balance. So, and B, decrease in shareholders' equity account. There's an increase on the right side, and there's a decrease on the right side, then that makes the equation balance, okay? And then if there's an increase in shareholders' equity, if there's an increase here, then you're gonna have an increase in the right side. There's no increase in the left side. It won't balance out, okay? Just think of that as a, what do you call that? You know, it's like a scale, but it has two sides. What do you call that? It needs to balance. I don't know. Okay, so B. Next question. The entry to record the issuance of stock causes an increase in issuance of stock. Will cause an increase in what? Assets and liabilities and shareholders' equity. D? Yes. What is the how do we record a transaction of issue a stock if we issue a stock? What do we get if you issue a stock? Cash. Yeah, we get cash from that. So there's an increase in assets, right? There's an increase in asset because if you issue stock, you get cash. So if you get more cash, then you get an increase in assets. And at the same time, if you issue stock, then the number of stock increases, and stock is shareholders' equity, right? So if you issue stock, then there's an increase in both assets and shareholders' equity. And if you look at the textbook, it's over here. It's over here. If you issue a stock, then there's an increase of cash, and there's also an increase in stock with shareholders' equity. Okay, next question. Record the transaction. Walk and Roll paid 50,000 cash for 10 acres of land. Does assets change? Does that have any impact on assets? Yes or no? Yes. What changed? What is that? You lose cash. Your cash decreased by 50,000. Any other change in assets? You gain land. So your land increased by 50,000. So the answer is B. Any impact on liabilities, stocks, and retained earnings? No. So these are A. Okay. So in this example, your asset changed from one format to another, and then one is decreased, the other is increased. So your cash, the total change in cash is zero. The total change in assets is zero, right? You have an increase of 50,000 in cash. You have a decrease. You have a 50,000 decrease in cash, but you have a 50,000 increase in land, and these two are both assets. So asset actually has no impact. Total. Okay. Question 11. Show the effect of the transaction. Cap and Trade Inc. purchased 500 baseball caps at $6 each. Okay. First, I need to ask a question. Does this transaction impact cost of goods sold? Yes or no? No. Okay? Don't be confused on this. Cost of goods sold is only recorded when you sell your products. Okay? When you sell your products, you will only record record cost of goods sold. But if you purchase your inventory, you will never record cost of goods sold. Okay? If you do not sell it, there's no cost. Okay? So, which one do you choose? So this one is very similar to the prior question that we purchase land. This one we do not purchase land, but we purchase the baseball caps, right? And what are these baseball caps will be recorded as after you purchase them? What is that? What are those? What?
D.
Inventory, yes. So this is D. It's very similar. Your asset changed from one format to another. Your asset changed from your cash to your inventory that you will sell to your customers, right? So this is just an impact on cash, and there's no effect on liabilities in retained earnings, okay? Questions? Oh, good. 12, true or false? An exchange of promises is a transaction that affects the accounting equation. True or false? What is a promise? So this is related to one of our topics in Module 2. When do we record the transaction? A promise is, let me see. Say you are shopping online and you put something in your cart, and then you said, well, I'm gonna purchase that tomorrow. Are you gonna record the transaction? No. A promise is not a transaction, okay? Once you receive a promise from a customer, the customer says, well, I'm going to purchase 200 hot dogs next week because we're going to have an event. That is just a promise. We do not record that because that promise doesn't impact anything in our accounting field. However, let me give you another example. The customer took 200 hot dogs from you, and the customer tells you, I'm going to pay you next week. Are you going to record a transaction? Okay, there are two different scenarios, okay? First scenario is the customer tells you, I'm going to purchase 200 hot dogs next week because of the event, and please get them ready. So this is the first scenario. The second scenario is the customer took 200 hot dogs from you and tell you, I'm going to pay you next week. So which one will impact our accounting information? The first or the second? Well, yes, correct. So that's going to be the second transaction. The first transaction, the promise won't impact our accounting information because it's never happened. But the second one, the customer already took the hot dogs from you, and you no longer have ownership on these hot dogs. They took your inventory, so you're gonna record a decrease in inventory and an increase in accounts receivable. That's what we're going to talk in module 2, but just let you understand the difference between a promise and a promise pay, okay? So this one is false, okay? A promise will not affect accounting equation. Okay, question 13. Show the effect of the transaction. They sold baseball caps that cost $6 each to customers for $3,000 cash. How many transactions are involved in this? Or how many journal entries do we need to do for this transaction? 2, right? Yes. Like I said, when you sell the products to customers, you're gonna record 2 transactions. One is the collecting of cash and the revenue that you earn, and the second one is the record of cost goods sold, okay? So the first one, if you look at the impact on assets, what impact on assets? What impacts our assets? So first, do you have cash? Do you have more cash from this transaction? Is your cash increase? Yes, your cash increased by 3,000. That's your sales amount, and it's also your sales revenue, right? So your cash and your revenue both increased by 3,000. And what is the second transaction? You need to record the cost of these products, and then what accounts will be impacted on assets here if you want to record the cost of your products. What decreased? What? Inventory. Very good. Inventory. So your inventory decreased by 1,800, right? Because it's 300 baseball caps that cost $6 each, and the total cost is 1,800. So 1,800 for inventory. And what is on the other side? What do you record on the other side? On the left side, you record a decrease in inventory, right? On the other hand, what do you record? Cost of goods sold, right? Yes. So the answer is for assets, G, an increase in cash, a decrease in inventory. And then for liabilities, A, no impact. And then for retained earnings, we have $3,000 sales revenue, and we also record 1,800 cost of goods sold. Okay. Any questions? So if you go back to the textbook, and this is very similar to this example. Okay. You record the cost of the sale, which is use the 150 pairs of stock inventory that cost $2 each. Okay, this question is very similar to this one. All right, next one, 14. Show the effect of transaction below. Cap and Trade paid a $20 cash dividends to owners. Okay, so this is a paid dividends, right? Any impact on your assets? Yes. What account? Cash, yes. A decrease of $20 because you paid cash. Your cash decreased, right? And then what else? Liabilities? Any impact on liabilities? No. Any impact on stock? No, we pay dividends. There's no impact on stock. Any impact on retained earnings? Any impact on retained earnings? Yes, because we pay dividend. So there's a $20 decrease in retained earnings because of the dividends. Okay. And think back. Retained earnings will be equal to beginning retained earnings plus net income minus dividends. Okay. Any question? No? Okay. 15. The contra asset account is used to record depreciation on equipment. Which one? Which one is that? It's a contra asset account and it's used to record depreciation on equipment. Anyone? Yes, accumulated depreciation. Okay. And do you remember, if we go a little bit further, do you remember the transaction that we record depreciation? The transaction, like how do we record depreciation? Do you remember? So if we want to record depreciation, there are two accounts that are impacted. The one is accumulated depreciation, the other one is depreciation expense, right? And this depreciation expense is on income statement. And depreciation expense, if you want to put it on the accounting equation, which one do we put depreciation expense here? Assets, liabilities, or shareholders' equity? Shareholders' equity, right? Why? Because depreciation is an expense, okay? Income statement, revenue, cost of goods sold, okay? Gross profits, and then we have all these operating expenses, right? And one of the operating expense is and one of them is depreciation, okay? And like wages, something like that. And then after this, we will just do, okay, we have operating income. And this is how much we earn from our operating, okay? Gross profit is what you earn from just selling products, and this is after our operating expenses. And after operating income, we have interest. Operating income is also called EBIT. We talked about that before. Earnings before interest and taxes, okay? And after interest, we have EBT, which is earnings before taxes, and we pay taxes, and we have net income, okay? And net income will go to, I'll just write short. Retained earnings from 2018 plus net income from 2019 minus dividends you paid in 2019, then you get your retained earnings in 2019, okay? And retained earnings belongs to shareholders' equity, okay? So that's why if there's a increase in depreciation expense, it will eventually impact your net income, and your net income will eventually impact your retained earnings. The retained earnings is shareholders' equity, okay? And then there's a decrease in assets because accumulated depreciation is a contra asset account. In other words, on the balance sheet, accumulated depreciation always has a negative sign in front of it, okay? Make sense? Okay. So accumulated depreciation. 16. Interest expense on notes payable is recorded with an increase to interest expense, which decreases shareholders' equity and what? Okay, so this is a very good question, a very tricky question. I really want to give 2 bonus points for attendance if anyone can answer this question completely right. Yeah, let's do that, okay? Let me open your seat chart. So that I'll know your names. Anyone going to volunteer to give the answers? You can raise your hand. Two bonus points. Yep.
A decrease in cash and asset if the interest is paid. And then an increase to interest payable or liability if the interest is owed.
I will hold until I tell you whether it's right or wrong. Just give other students an opportunity. Anyone? Yep.
Is it B and C?
B and C?
Yes.
Okay. So her answer is C and D, and his answer is B and C. Okay. Anyone else? Yep.
The last two.
The last two? Okay.
Payable liability, interest owed, and increased interest payable, which decreases the shareholders' equity.
Okay. Okay. So we have 3 answers: B and C, C and B, D and E. Anyone else? Okay. C and D. Okay. Anyone else? Yeah.
Isn't a decrease in cash and asset and increase in liability?
Okay. So you agree with C and D, right? Okay. Anyone else? Yeah. You wanna?
Yeah, an increase to interest payable or liability if the interest is owed. And then a decrease in cash and asset if the interest is paid.
So it's also C and D, right? Okay. Last call. Yeah. You have?
I would say C.
What's that? C and E? Okay. Last call. Okay, so I would say the answer is C and D. So let me quickly find your name. What is your seat number? Seat number?
F1.
F1.
Oh, yes, it is. F1.
F1. Abby?
Yes.
Okay. And then you are FG. What is your name? The girl in the middle. Yeah. It's not here, right? Oh, G3. Okay, I got you. And then who else in the middle? What's your C number? F7. And you must be G8?
I'm actually
G10, okay. And who else answers C and D? Okay. So the answer is C and D, okay. An interest, the reason that we don't choose E is actually for the right hand side, interest expense is recorded as a decrease in shareholders' equity, right? Interest expense is a decrease in shareholders' equity. And then on the other hand, how do we record, either we paid or not? If we paid interest, there's a decrease in cash. So that is C, and you targeted C, and C is right. If you pay the interest at a point, then there's a decrease in cash. But what if you didn't pay if you haven't paid interest, then you should have, but you haven't, and that's your liability, right? So interest payable is a liability, and then if you haven't paid, then there's an increase in your liability, while there's a decrease in shareholders' equity. So that makes the balance, the equation hold. Okay, so the answer is C and D. We good on that? Okay. Yeah. What is that?
Explain why it's not.
E. Okay, so again, so first, interest expense, we already recorded. There's a decrease in shareholders' equity. And then E, an increase to interest payable. That is right. The first half is right. But the second half, interest payable is not shareholders' equity. Interest payable is liability. Yeah. So last time I mentioned any accounts that with receivable, then what is that? Do you remember? We say accounts receivable, interest receivable, what is that? Asset, right? And then anything that was payable, interest payable, wages payable, what is that? That's your liability, right? And then do you remember what is prepaid something? What is that? Like prepaid insurance. Is it an asset or liability? It's your asset, right? Prepaid. That's not your responsibility. That's not your liability, okay? Like you prepaid your car insurance 6 months in advance. Then you have the assets, right? That's not your responsibility anymore. You don't owe the insurance company any money. So that's not liability, okay? All right. So next one. Financial statements can be prepared monthly, annually, quarterly, only at the end of the calendar year. This is just, to understand financial statements. Yeah.
Annually and monthly
It can do,
and quarterly.
yes, you can do any time. Monthly, annually, or quarterly. Anytime that you want, you can do a financial statement, okay? However, do you know what is required by the SEC if you are a public company? If you are a public company and then the SEC only require quarterly report and the annual report. These are called 8K and 10K. 10K is the annual report and the 8K form is the quarterly report, okay? If you're a public firm. But sometimes you can also do monthly analysis for your own business, okay? Okay, 18. How many of the following line items are on the income statement? Okay, how many? Tell me a number. Or let's do that one by one. First one, supplies expense. It's a little bit vague, actually. Supplies expense, I think it means, for example, if you do a, car dealership, but you also have to pay for like paperwork, computer, like pens, things like that. And these are also supplies, but these are not your, inventory. It is probably inventory, but this is not your cost of goods sold. Do you agree? If you do car dealership, then like papers and pens, these are not your cost of goods sold, and these are your supply expenses. Does it make sense to you? Mm-hmm. So supply expense should be on the income statement. Retained earnings, yes or no? Yes or no? No. Retained earnings is not on the income statement. It's on the balance sheet. Notes payable? No. Notes payable is a liability, right? So it should be on the balance sheet, right? Depreciation expense. Is depreciation expense on the income statement? Yes, this is on the board. Okay. And stock? Yes or no? No. Stock is a kind of shareholders' equity and should be on the balance sheet, right? Equipment? Is equipment on the income statement? No. Equipment is asset. Yes, it's on the balance sheet. So the answer is 2. Okay. Question 19. Net income equals which one? Yep. B, yes. Net income equals to revenue minus all these expenses, right? Yeah. Okay. So question 20. How many of the following line items are on the statement of shareholders' equity? Statement of shareholders' equity. Okay. Supplies expense? No. Okay. When we say if there's a change on the income statement, there will eventually be a change in the shareholders' equity. But the shareholders' equity statement does not include all these items on the income statement. So this is not. What about beginning retained earnings? Yes or no? Yes. Those payable? Those payable? No. It's liabilities on the balance sheet. Dividends? Yes. Stock issued? Yes. Proceeds from loans? No. This is proceeds from the loans actually on the cash flow statement. Okay. So how many? Beginning retained earnings, dividend, stock issued plus 3. Okay. So we'll do the last question, and then I think we have a couple more on Monday. Which financial statement reports how much cash was collected from customers? This is easy, right? Which one? C, yes. Okay. So I would draw a poll for Monday. I think there are a couple more questions that we left for Monday, and